Are you a day trader who's super busy? You don't have a lot of screen time, but you want a highly effective strategy that you can trade when there's a high probability setup and you have complete confidence that it's going to go your way majority of the time? Well, if so, I have an amazing strategy called our BSWING strategy. It is one of our highly profitable strategies at BK Trading Academy. If you're new here, my name is Kenya. I'm an owner, professional trader, and educator with BK Trading Academy. We help new and struggling traders learn how to trade with structure and guidance so that you start the right way, you have a breakthrough, and you learn how to trade confidently. Don't forget to subscribe, smash that like button, and let's go through step by step how this strategy works so that you can start using it today. So BSWING is a supply and demand strategy. If you've never heard of supply and demand or you're not that familiar with it, it's basically where a lot of buying and selling happens in the market. And this one particular price area on your chart is where buying and selling occurred in a vast amount in the past. So that's what makes supply and demand so much fun, so attractive, because it is where you're going to find a lot of transactions in the market. Now, some people will confuse this with support and resistance. Support and resistance on your chart is where you have previous buying and selling, but those areas on your chart have been traded more frequently. There's been more transactions throughout that price value area. When you have supply and demand, you're going to find very steep areas on your chart where price hasn't been in months to years, and you will see aggressive buying and selling at those levels. So let's go ahead and hop into our chart. I'm going to show you step by step how to trade this strategy, what to look for, and the rules that you need to follow in order to find a high probability setup. All right, so we're going to start on a chart of GBP USD. I'm currently on the monthly time frame. Now, the very first thing you want to do with BSWING is you want to make sure that you start out on the monthly or the weekly time frame, and you're simply just going to scroll through your charts looking for price gaps. And what I mean by that is if you notice on GBP USD, price is currently at our high right now of 1.3265. This is the highest that it's been this month so far, but you will also notice that there is a gap between buyers and sellers. And what I mean is that there's been no price action in this area at 3265 since March of 2022. So this is going to be definitely an area where you're going to see sellers potentially step in, just like buyers and sellers did in the past. So you can see that right on this chart. So that is the very first thing you want to look for. In order for you to have a BSWING confirmation, the very first rule you must have is that price must have not tested the level in more than 6 months to a year or more. So if I go, for example, to the next opportunity, you'll see here on Euro AUD, price has fallen quite considerably, and you can see that there is no gap between the price action of where price is now in relation to the previous price action before it. Price has been in this area multiple times within the past consecutive months. This would have been possibly more of an area right here where you have a gap. So you're always looking for a gap between buyers and sellers, okay? So you want to see where you've had aggressive buying or aggressive selling for some time. And when you find these setups, they are powerful money makers because you don't have to be in the marketplace and trades every single day. You can simply trace BSWING, and when you get a BSWING setup, it is time to make your money. I can go to another one. This is Euro NZD. Again, look where we're finding price gaps. So look here. And look here where price has not been in this area at 1.8636 since April of 2020. And look at the aggressive selling that happened in this area, okay? So that is exactly what you want to find. So now let's go back to GBP USD. We're on the monthly, and we know that we have a level that has not been tested in more than 6 months to a year or more. So that is one. The next thing we need to look for is we want to go down to our weekly time frame. Now, we focus on this price area because look at what has happened in the past when price has come to this resistance zone or to this support zone. We are looking now for sellers to come in and for there to be aggressive selling because look how long buyers have been controlling the market for the last 2 or 3 months. So price has gone up from 1.2622 to 1.3265 or so. That's about a 636 pip move over 2 months. And of course, price has gone up and down a little bit. So you could have had multiple opportunities within that move, but this is exactly what we want you to see. So we're going to focus on this level right here. So once we have the level and we know that it has not been tested in more than 6 months to a year or more, we're going to move down to our weekly time frame. Now, the next thing that we want to do is we want to see on the weekly, we are focusing on this price zone. We know that we have a gap between buyers and sellers, and so more than likely, sellers are going to step in just like they did in the past. Buyers stepped in, sellers stepped in, and we studied this area again, and we studied this area more in the historical past from the monthly time frame to see that this was definitely where aggressive buying and selling took place. So now that we know that, the next thing that we want to find is we need to have a Bollinger Band confirmation, which means we want to see price outside of the Bollinger Band on the weekly and preferably daily time frame, but mostly on the weekly. So I'm going to put a Bollinger Band confirmation on there, and you will see that price is outside of our Bollinger Band. And every time price is outside of our Bollinger Band, preferably with a wick, that is a very powerful confirmation. So you can see selling pressure, selling starting to take place. That is exactly what we want. So we have our level that has not been tested in more than 6 months to a year or more. We have a Bollinger Band confirmation. The last confirmation is wick rejection in the reversal zone. That is all we need, guys. And you have yourself a high probability trading strategy. Very simple. Trade in the higher time frames. You don't have to be on your chart at all times. You're simply going to mark alerts at these levels and wait for price to get there. You run through the rules, make sure you have a confirmation, and you want to plan your risk out from that area. Now, let's go ahead and talk about risk. So typically what you'll find, and when you backtest this strategy, is that you can go for about 200 pips within a week to 2 weeks, and that's holding multiple positions. But you should be able to get a 200 pip move just off of one position, all right? And what I want you to see here is that back in March of 2022, okay, and you can see it was support and resistance, but look when the market fell from this level, look where it stopped or paused. So we have where it dropped to 1.3062, it went back up just a little bit again, and then it continued to fall, and then we have an area of support here where the market touched this area 1, 2, 3 times and then broke through it on the 4th time. So let's just measure from where we would have potentially entered to where price paused multiple times. That's 293 pips to the downside. That happened pretty much within a week or 2 weeks. So that's what you're going to find with BSWING. These moves will happen and play out within about a week to 2 weeks. Now, does it play out majority of the time? Yes, it absolutely does. We have the data behind it to prove it. But there are times when you do have a failed BSWING, and it doesn't happen very often. But when you do have a confirmation, you can pretty much expect about a 200 pip move. So just remember that. And those are things you want to back test for yourself. Now, let's go ahead and mark a zone above price, so we have that. And let's talk about our stop loss. So when we are swing trading, we typically use very wide stops because we are trading the ebbs and flows of the market based off of forceful swings. So we're letting some type of forceful swing happen, and we're coming in and trading those swings, either the recovery of that swing or we're getting at it at a really good support or resistance level. So keep in mind, we have to study the price action. So look here, if we're selling at this level, we have to look above and see where is the next reversal zone. So here we have an area of resistance, also support. So I would have factored that into my risk. And of course, we do have this area here. This might be a little bit too far, but what we could say is that if price were to continue to rise, this would be about a 170 pip move at 1.3426. That's a really small stop loss in my opinion. So what I would be doing is adding more positions, probably up until about this area, 170 pips to the upside. Then I would have set my stop loss above that. One reason why I would do that is because I know that this is a strong reversal zone. Price is already overbought. And more than likely, it's not just going to keep surging to the upside another 100 to 200 pips. That just doesn't happen unless we had some type of world event or news that caused that to happen. But you can see on the daily, look how long the price has been going up. And then we finally printed a small little bearish candle. We broke higher again. And then you will notice that before this on the lower time frame, the candle started to get smaller. And then we also saw wick rejection on the lower time frame and price started to break down. So we now have a nice bearish candle that has formed on the daily. But now check this out. So now that we have an area of daily, weekly resistance that we mapped out from the weekly, often what happens with a B swing or when you're swing trading is that price is not just going to fall hundreds of pips and we've made our profit and we're done. What's usually going to happen is that you're going to have price hit a support. Notice that it's testing a daily support right now. It's going to bounce up and it's going to come down. It might bounce up a little bit again, and then it's going to get to the next level. Okay, it's going to bounce up and then come down. It's going to bounce again, and it's going to go probably to the next level until maybe it continues its trend. Because of that, what I have learned from journaling is that I have multiple opportunities when swing trading. So oftentimes, for example, if I sold here at 1.3260, at the next reversal zone, I know to take some profit off the table and pay myself because more than likely price is going to bounce from here. And I have confidence that this is not fully done retracing because look at the weekly time frame. It's just starting, okay? It's just starting. So if I know that if price comes back up to push up a little bit, I'm going to enter some more short because I still have opportunity to make some more money while I'm holding my overall positions for price to go in my favor. So if I know that, all right, I'm going to set an alert so that when price gets back to maybe the area where I want to execute more short, I can look at my chart really quickly, or I can just go ahead and set those pending orders and just let it play out and do its thing. So if I'm busy, my orders will activate. I already have my stop loss planned out. I know exactly where and how I want to execute, and I can go ahead and go about my business. Okay. So this is pretty much how it works. And I'm just kind of describing to you exactly how I like to move in and out of trades, constantly paying myself while I am swing trading. Like I said, you don't need to be executing trades every single day in the market. You can make money when price gets to these extremely overbought and oversold levels, and you can make your money in the market. So I have a level above price. I'm going to go ahead and mark a level below price. And now you can see that we have an uptrend on this daily time frame. We're definitely due for a correction on the weekly. We have our B swing confirmation. And because we are in an uptrend on the weekly daily, we definitely want to continue to trade this uptrend. But in order for us to come back to the market and place buys, we need the price to come down considerably because we want to buy at a higher low, not at a higher high. And if we look at the structure of this uptrend, if we look at the past, we can see that in this uptrend structure, this was our previous resistance. So we expect in the future for this area to become our support. Now, you might be thinking, well, what if price only comes here and then it goes back up? Well, it could do that, but it's very unlikely that it will. And some of the signs that are telling us is the weekly time frame. So if we know that the weekly has an impulse, and we know that in order to bring knowledgeable buyers back to the market, we need that price to come down. Professional traders are not going to buy this high. We're just not going to do it. We're going to be patient and we're going to let the price come back down to us. Until that happens, we won't be placing buys in the market. That's just how we trade. Okay. So what we could do is we could also take our Fibonacci retracement tool, and on this weekly time frame, we can measure this current impulse from the low of the impulse where it started to the high, and then we can mark our level to potentially buy at the 50% to 618 fib. And if I do that, that will put us right back about right here. And if I take this off, now you can see that this level aligns with previous resistance and also support. So we would definitely be monitoring somewhere in here where price would give us a retracement, and then possibly we will look for an entry opportunity. Again, look how this aligns with my previous areas of buying and selling. And like I said, we want to be watching somewhere around here. Even if price moves a little bit lower, we can use a 50-period moving average. So we know right now that selling is our opportunity. Price is quite high. We can also look for additional confirmation. So look at the weekly. I also like to use divergence and the RSI. You can see that our RSI is at the 76, pretty much 76 level. I love for it to be at the 80 level when I am selling, but I don't like to use a lot of indicators. I like a nice clean chart, and I only like to use indicators for a quick reference and take them off, and that is exactly what we do with BSWING. So I've given you a high probability strategy that you can use over and over and over again while you're sleeping, while you're working, while you're traveling, and you don't have to look at your charts excessively. What you can do over time is that you're going to journal and you're going to look at your opportunities that arise when you are trading this strategy. And when you do that, I promise they are going to stick out to your naked eye, and you're going to see where your opportunities for pullbacks are, re-entries, profit taking, how many times you could have taken profit and re-entered the market while holding trades for the market to go in the overall intended direction. So the other part of it is just planning your risk management that you're very comfortable with. We teach our fractional lot size method here in the Academy, which we are very, very dedicated to because it absolutely does work. And that's what we teach our students. And you'll hear in a lot of our testimonials that that is one of our students' favorite experiences in the Academy is our risk management and the way we teach it. So guys, I hope that this strategy is helpful for you. You can go to bktradingacademy.com and you will find a very detailed training manual that we have with BSWING. So if you are looking to take this strategy serious, I do recommend that you purchase the training manual. You look at how the risk management is explained in the manual, the many illustrations to help you master the strategy, and you'll be on your way in no time to feeling really comfortable and profiting with this strategy at all times. If you are a new or struggling trader, I want to invite you to come and join us in BK Trading Academy. Study our leadership, watch how we lead, and just watch how we execute in the market. You can follow us on TradingView, and we do a lot of hand holding. We answer a lot of questions. You are never alone in our academy. No matter how many students we have, we're always right there in your face, holding you accountable, walking you through the market, showing you how we execute, how we do trade management. We've been doing this for years. We're really good at it. We do it full time. We do it in our sleep now. We put in so much hard work. A lot of you have followed us for so long, and we're just really thankful that we get to do this every single day and be able to help teach and give back to so many who are trying to be successful in this industry. So guys, thank you so much for watching. Comment below what you loved about this video or any questions you have. I'd love to hear from you. And in the meantime, make sure you subscribe, smash the like button. Look forward to our future content, and I'll see you in the next video. Thanks for watching.